Let's start off with like, what's the main difference between what a CPA does and what a CFO does? Because, it seems like they kind of intertwine.
As you know, CFO stands for Chief Financial Officer,
Right.
and CPA stands for Certified Public Accountant. So a CFO is more in charge of directing the direction of a company, both from a finance standpoint, where you're looking at cost projections, cash flow forecasting, bank financing, things like that. A CFO does not have to be a CPA. We have a few clients that their CFO has a finance background versus an accounting background. But CPAs do make good CFOs because they're very analytical. They can break down complex ideas into fairly simple structures. When we were working with a construction company, we went in kind of as their outside CPA because one of the owners was acting as the CFO, and we looked at their cost structures and found out that they could increase their income by about 30% because they were missing a fairly significant item in their bidding process. So, a lot of people call themselves CFOs just because it sounds good, but they aren't necessarily. Whereas a CPA, you have an accounting background. Outside CPAs, like in our case with a lot of our clients, we're the ones that prepare the tax returns at the end of the year. We may do some forecasting as far as cash flow and pricing analysis and break-even analyses, and we can kind of help the CFO in doing his share of that too.
Thanks for watching this video. If anything we said hits home and you'd like to learn more about it, please feel free to contact us. Our phone number is 414-325-2040, or you can email John, Jon, at neilgroup.net or Michelle V at neilgroup.net. Thanks for watching.